Hi, and welcome back to my final morning report task appraisal on Thursday, the 19th of May, with me, Richard Perry, market analyst at Handtech Markets, looking at gold. And we've seen the strong dollar in the wake of these Fed minutes, and that has pulled commodity prices lower. Strong bear candle on gold, and this corrective move that we've seen in the last few weeks on gold continues, and it's now threatening this bull trend. So we're seeing this medium-term sort of uptrend on gold being threatened by this correction. You've seen the momentum indicators, which are sort of increasingly corrective. You've seen the RSI, which is dropping back towards the sort of mid 40s level. If it goes below that, sort of closing on a closing basis, you could suggest that that is the end, or certainly the end of the bull medium term control, and you'd be more of a sideways trend once again. So you've also got to factor in this 55-day moving average, which had been supportive throughout April, is now basically back towards their now 1250 on that moving average. So that uptrend currently comes in around 1252 area. So you're sort of pulling back towards that at the moment. 1254 at the moment. Today's traded low, 1251.65. So you sort of basically bang on that uptrend today, and it'll be really interesting to see if it can hold on, because that RSI is again back to all these where the levels it was where the corrections came back in March, April. So you say theoretically, if it could hold on to this, then that's a pretty positive move, and ultimately you could see the buyers return. But if you lose that support of the uptrend, if you lose the moving average, and you come back to test the next sort of supports. 1237.65 is that reaction low that we got on the 28th of April, and then you're sort of looking at 1227 again, which is sort of back further into April. But really interesting moves that we're seeing on gold to, in the wake of this Fed meeting as this correction continues. The momentum indicator is more corrective on the hourly chart, certainly. The hourly MACD, hourly RSI, both configured negatively. Rallies are sort of failing around the 50 to 60 level on the hourly RSI. You've seen the MACD lines fairly sort of stretched, I think you could argue, so maybe there is the prospect of a near-term bounce. You've had a bounce already. That old support around sort of 1260 is now already becoming sort of a basis of resistance on this breakdown. That has been seen overnight, 1260 area. So between 1257 and 1263, you've basically got sort of $6 worth of pretty strong resistance on a near-term basis. And then you look up at 1269, which, if I leave the crosshair there, is sort of capturing the lows of the last couple of days. It also captured recent highs, but if you look out further, you can see it also was a support back here as well. So it is a pivot level. Clearly, the market is looking out at, and it is again this level here. So around 1269, 1270 is an old pivot level that the market is also looking at for. So that is a key level back for the bulls to retain. For the bulls to regain, and also initially the 1260 sort of to 1263 area as well. So a lot of work for the bulls to reclaim the ascendancy, but they are under threat at the moment, and this uptrend that we've seen in the last sort of 10 weeks is coming under pressure. So I wish you good luck in your trading today, and I will speak to you tomorrow. Thank you.